So, hello everybody. It has been quite a while, but I'm fairly certain y'all could tell why it has been quite a while because we just moved into our home. And I did warn you guys that it was going to be a bit since we were moving. However, because of the fact that it is earnings season, I figured, you know what, let's take a look at a company that is going to be number one right now when it comes to earnings, aside from Netflix. Obviously, they already had earnings. The company I'm talking about is, of course, Tesla, because this thing has been for quite a ride this year, right? If I'm not mistaken, this thing has just been up and down, crazy nonsense. It's just absolutely crazy. So let's actually take a look at Tesla and see if doing a discounted free cash flow, we can actually make sense as to their current price. Now, starting off, we could clearly see that when it comes to Tesla, the chart on the 1 year, it is up 102.24%. Absolutely massive. Year to date, it is up only 9.6%. It's gone for a wild ride, reaching a low on the 52-week of $212.11 and the 52-week high of a whopping $488.54. Very, very interesting right there. Now, Seeking Alpha currently is having this stock, Tesla, as a massive sell, 2.25. We got 36 authors. So this is actually a decent sample size here, 36. In fact, not far off from Wall Street. But we can see only one strong buy when it comes to Seeking Alpha. We got 8 buys when it comes to Seeking Alpha, 2 holds, 13 sells, and 12 strong sells. When it comes to Wall Street, we can see something similar. However, they are putting it at a hold at 3.44. We got 47 authors, 16 strong buys, 5 buys, 17 holds, 2 sells, and 7 strong sells. So it's definitely more bearish on the bearish side, right? Overall than the bullish side. However, when it comes to earnings are actually looking massively to the upside, as we can see right here. Earnings will be on 10/22, which is today, as if you guys are seeing this, and we can see that 56 cents estimated non-GAAP normalized estimate, EPS GAAP estimate of 44 cents, a revenue of $26.7 billion. And look at this, 22 revisions, 17 to the upside, 5 to the downside. So definitely more bullish when it comes to the overall earnings. However, overall sentiment as compared to this, we can see that it is more leaning to the bearish side. Now let's take a look at, of course, my discounted free cash flow approach, because this is a company that we always get flack in. But honestly, guys, I'm beginning to change my mind now because their fundamentals have actually gotten a whole lot better. We got the ticker for TSLA, market cap of 1.4 billion, current price of $442.60. Today, they were down around 1.08%, a whopping PE of 256.53. That's disgusting. Like, guys, a PE of like 20 is considered normal. 50 is high. 256, that is ridiculous. They don't pay out a dividend. However, we can see that price to free cash flow currently, it is 248.28%. The average price to free cash flow is 83. So that's 2 metrics right there, PE and price to free cash flow, that's saying that the company is massively overpriced. Price of sales of around 15, and net profit margins is actually fairly positive, 6.34% for being a car company. Very, very interesting right there. Now, when it comes to their overall free cash flow, because they don't pay out the dividend, all of it's going straight into their into everything else, right? Into growing the company, which is perfectly understandable. We got $1.92 billion in the 10-year average free cash flow, and the last year is actually 5.6. So really, really nice increase right there. Now, when taking a look at these fundamentals, we can see that the net income is actually looking interesting. Negative from 2015 to 2019, and then up really, really high in 2023. But as of recently, they started declining. This is an overall increase, though, of 762%, as you guys could see right there. I do like the graph. Just because there's negative doesn't mean that it's necessarily a bad thing. As I've stated several times, I just need to see this overall growth. It's not looking too bad. This, however, I think this is more of a return to the mean than anything. We got the free cash flow now. We got massive negatives once again, 2015. So you guys could see right there. In 2018 positives, and now we're kind of just returning to the median. We could see just fluctuation, 2022 down to 2024, and now we're right back up. Overall, though, this is an increase of 159% with an average of, as I said, around $2 billion. Really, really nice right there. Revenue really nicely increasing. However, it's, by the looks of it, it's currently plateauing. Nice increase of around 2,200%. Absolutely crazy. So yeah, I like the revenue, right? I really do like the revenue. However, they have had controversies, and we'll see how those controversies actually affect it so far this year. By the looks of it, it seems like it's just going to plateau. We'll see how these earnings come in at. Total assets nicely increasing. Liabilities also increasing. However, assets minus liabilities is really increasing in a nice, upwards direction, up and to the right. Average total assets of around $61.6 billion. Liabilities of $30.34 billion. Is a difference of $31.2 billion. Overall, really, really good to see right there, that increase. No negative numbers. Cash flow minus liabilities, not surprising that they're taking a lot more liabilities. They're trying to innovate. We can see that the trailing is looking at negative $45 billion. The average cash flow minus the average total liabilities, negative $28.4 billion. So currently they're a lot lower than the average, but once again, that is expected to see. Shares outstanding, not surprising that Tesla, it is increasing shares. However, I'm actually fairly surprised that they're not increasing more, because yeah, AMD increases about like 200%. The fact that they're still under 100, in fact, under 65, fairly surprising. And by the looks of it, they're seeming to plateau at around this price tag. Well, not price, around this share point, around 3 billion shares, 3.2 billion shares, as you guys could see right there. The rate of increase is decreasing, I guess you could say. Now, this is an increase of 63.54% on the 10-year, previous year to the current year, an increase around 1%. Bad, but perfectly understandable. We'll see how that proceeds throughout the years. And lastly, cash equivalents. They currently hold $15.6 billion with an average of $10.84 billion. Now, let us actually take a look at the discounted free cash flow. I already put in some of these numbers. We got the average revenue to free cash flow growth at 14.3. Average net income growth, 92.7. And share change, they are increasing at around 5.22%. So when it comes to the free cash flow to revenue growth, I'm actually going to lowball this a lot, because I'm looking at this, guys, and it's just like, this has to come down to the median, right? It has to come down to the median. We see that the free cash flow is starting to stagnate. The revenue can't continue to increase, but all in all, 14.3, I don't really see it. However, now that I'm looking at this again, maybe 5 is a little bit low. Let's go at around like 8%. Let's actually increase that to 8. Let's increase this to, let's say, add 3 to it. So let's say 11. And for the last one, let's add 3 again, and then that will make it basically 14. So I'm assuming that the highest assumption would be the current median, right? The current average. Sorry, not the current median, but the current average. Okay, net income growth. Guys, I cannot put this at 92. It's just impossible. Again, we've seen the revenue kind of stagnate. The reason why it's 92 is because they had a massive rise from negatives, right? But that's just not the average. I can't take that as the average. So I'm going to say 5, 8, and 11% when it comes to that net income growth. Maybe a little bit low, but again, the company will eventually just come back to normal. They're not going to have this massively increasing kind of potential forever. It's just not possible, right? PE, I'm going to bring it down by a lot. 172, even though that's still ridiculous. 172, 238, and 268. Yeah, even though currently is still really, really high, I'm going to give it these numbers, right? Again, the current net PE is 256. So on the highest assumption, I'm going to say 268, higher than the current median, a little bit lower, and then way low on the lowest assumption at 172. Share change, I'm going to say 2%, issuing 2% of shares for the median, 5%, and for the highest, 8%. And for the discount rate, or weighted average cost of capital, 15, 10, and 8%. I got those numbers using AI, which I highly suggest you guys do because it's very difficult to find these numbers. But we can see that the discounted free cash flow comes out at $197.60 for the lowest assumption and $1,600 for $1,620 for the highest assumption, smack in the middle of $683. With the current share price of $442, we are practically right here in the middle. In fact, if you take the 15% margin of safety, $580, we could clearly see that we're basically in between these two, which honestly, kind of justifies the current price. Even at $442, according to the discounted free cash flow, still looking like a quote-unquote cheap stock. Again, everything does depend as to what you believe in these numbers, because if you put in 92, well, let's just say if you put in 92% for that, this thing's going to go up to 64,000, right? So it's just what's reasonable in the long term. Can a company grow at that rate forever for the next 10 years? Probably not, right? Probably not. It should eventually just die down in the sense that it should eventually just come back to normal, come back to the mean. So that's basically what I'm trying to do. But even with that, it's still looking really, really good overall with the current price. Again, that's just my personal opinion, not financial advice. Every investment is the present value of all future cash flow. So have these calculators, guys. They're available for free. The 5-year one. Make your decisions for yourselves. So all in all, when it comes to Tesla, even though with the controversies, right, with Elon and politics and all this stuff, the stock came roaring back. At the end of the day, I don't like betting against Tesla. Even though in the past I've said the stock is too expensive, I'm not going to bet against it though. So yeah, by the looks of it, it is looking really, really good. And let me know what you guys think. We'll see, by the way, what happens during these earnings, because for all we know, the earnings can come out absolutely bonkers and the stock could rise to $500 or so, or it could end up crashing it. We'll see. But that pretty much does it for this video. Make sure to like, subscribe, comment. It really does help with the algorithm here on YouTube as well as Rumble. Make sure to follow us on X at Fail Investing. And of course, if you'd like to join us on Discord, the link to this in the description below. So with that said, guys, peace out and have a blessed